we launched last year at the Generation Equality Forum, the 2X Collaborative as an independent organization and a global industry body for genderless investing, convening the full spectrum of investors and capital providers. So opening it up far beyond the DFIs and MDBs, inviting pension funds, family offices, financial institutions, private equity and venture capital funds, and other types of mobilizers and capital providers globally. The 2X Collaborative was launched in close partnership with Gender Smart and formally started operations earlier this year at the beginning of the year. And we now have over 50 members across the full spectrum of asset classes, types of investors, sectors, and geographies. Reflecting on what we have learned and kind of where we see the way forward to further push the frontiers on genderless investing. We've just had at this year's G7 side event, a reflection on kind of where do we stand as a field, what have we achieved, what is happening next, where are we headed? What we have achieved is global standard setting for genderless investing. So we've really mainstreamed the 2X investment framework, the criteria and harmonized indicators across the industry and established a global industry standard. We also see at the moment a very interesting trend in terms of thematic deep dives. So for example, we see a lot of traction at the nexus of gender and climate, particularly relevant for this audience, digital inclusion, innovation and tech from a gender perspective. We see new investment trends and insights in the care economy, and also topics such as gender-based violence and other thematic deep dives. We have also seen a lot of innovation when it comes to technical assistance, and especially a particularly interesting trend of impact-linked finance. And looking at the capital pool of how we got to mobilize the 11 billion, what has worked well, what hasn't worked well, we've done a detailed analysis of kind of carrots and sticks and nudges and how we can create incentives for financial institutions, funds, other intermediaries, and companies to really push the frontiers further on gender. So where we're headed with 2X is towards 2X certification. We have established with the 2X investment framework what good looks like. We're now moving on to, together with the industry, co-shape what does better look like and what does best in class look like and how do we get there further and faster. And the idea is really pushing the frontiers, especially on intentionality. So it's one thing to, kind of mainstream gender across everything and do well on the 2X criteria across the board. But what we've seen when we really want to be transformative and really drive deep impact, it's about intentionality and also incentives. And I want to share with you one example that I'm particularly excited about, one case study that I worked on last year when I was still an investment manager at DG. And interestingly, I collaborated on this with Roots of Impact, so with Björn and also Sana, who's here today on the panel. And it was with a financial institution in Mexico, MEGA. So what we did was we structured an impact-linked finance transaction to achieve an ambitious business model transformation. The management and the entire financial institution were already very much bought into the business and impact case of genderless investing. But what this transaction really helped, and especially these incentives that were embedded in finance, was on the one hand to go much faster. So we structured it in a way that would allow a full business transformation towards gender in only 3 years. The other component was to make it bolder. So like how ambitious can we be? How fast can we go? But also how meaningful can the transformation be? And so the objective was with this impact-linked finance to really establish the institution as a market leader in Mexico for women SMEs. Then we also wanted to go deeper. And I think that's particularly interesting when you compare other approaches to incentives with impact-linked finance. So by structuring it as an impact-linked finance transaction, we were able to not only look at gender, but also explore opportunity at the nexus with climate. We also looked at opportunities specifically in the care economy, which is a very underinvested area. We also applied a JEDI lens, so broader justice, equity, diversity, and inclusion lens, looking at what are other excluded groups, so kind of gender plus, and how can we promote their financial inclusion. And we also looked at more male-dominated sectors, so sectors that are much harder to reach, but where we can really have transformative impact. And then finally, we looked at it holistically. So the institution was really motivated to also use the premium that comes from impact-linked finance, not only kind of for their own operations or as an additional revenue stream, but to reinvest that into addressing social norms, providing non-financial services, promoting bankability of excluded groups. So really doubling down on their impact. This is just one example. We've seen a lot of innovation happening. You can see it, some examples summarized on the right-hand side. In our community of practice on innovation and TA and gender incentives, we're looking at examples of carry linked to gender outcomes, for example, impact linked finance, of course, interest step up and step down based on gender KPIs, research on the evidence base of effective TA, bonds that are innovatively structured. So there's a lot happening there. And I'm particularly excited to see that a number of our co-leads of the community of practice and members are here today. So thank you so much. I'm very much looking forward to the panel and the further discussion, and also celebrating the success that we're celebrating at this launch event.
Thanks so much, Jessica. Right, we do have a few minutes. If anyone has any questions specifically for Jessica, please feel free to pop them into the Q&A box. Jessica, thank you so much. That was really wonderful to get the overview. The collaborative is doing such phenomenal work, and it's really exciting to see it come to life. And as you said, to see so many friends and partners in the virtual room with us today. I see that we don't have any questions coming through, which I assume means that this was crystal clear. So thank you so much for that, for the session. To the audience, please do feel free to continue to pop questions into the chat as you think of them. But thank you so much, Jessica. It was really wonderful to have you. And now we'll move on to our next speaker, Christine from SDC, who will be sharing about the potential of impact-linked finance for sustainable development. Christine, over to you.
Thank you so much, Natasha. Good afternoon, everyone. And thank you very much to Jessica for the good presentation. I'm very happy to speak now on behalf of the Swiss Agency for Development and Cooperation, SDC, how we are called, on today's launch of this important fund. I'm particularly happy that my agency joined this initiative from the very start, as I'm convinced this initiative really is timely, it's relevant, it's strategic, it's innovative, and it spearheads change in the development sector. Why do I think so? First of all, it's focused on women. And when we see the backlash happening in the world these days or today, investing in women is more needed than ever. Secondly, it engages with the private sector and leverages their funding. And that's what we need, because public actors cannot fulfill the sustainable development goals all over the world alone. And thirdly, it uses impact-linked finance as an innovative tool to nudge the market in the field of women's financial inclusion. Let me say a few words on each of my three points. The first one was on women. We development actors, but also the private sector, cannot afford to ignore women and their potential. This pertains to all areas of life, hence also to financial inclusion. Women who have tools to save, to borrow, to remit and invest can better manage risks. They can ensure smooth consumption in the face of shocks. They can fund household expenditures such as health, nutrition, and education. Ensuring the financial inclusion of women strengthens their social protection, their livelihoods, and their decision-making power. It empowers them, and that is sustainable. At our agency, we focus on supporting particularly vulnerable women, and one such group are migrant women. And globally, over 280 million people are international migrants today. They live and work outside their countries of origin. and nearly half of them are women. Most of those migrant women send money, remittances, back home. And often they do so through informal and expensive channels. And they do so despite their meager income. Millions of families rely on these money flows, and they are a crucial safety net for them. Yet, migrant women should not only be able to remit money, they should also be able to save, to borrow, to invest, to get insurance and pension. Through this fund, we want to make sure that vulnerable women, and particularly migrant women, are financially included. My second point referred to the private sector as an investor. We all know, in order to close the development finance gap to achieve the SDGs, mobilizing private investments with concessional development funding is crucial. Only around 6% of private finance mobilized by development finance interventions between 2012 and 2018 was invested in the least developed countries. And very little of these investments are leveraged to particularly target women. So we do have a huge gap there. Our agency puts a high priority on engaging with the private sector, which is also goal 17, right, of the SDGs. As a catalytic funder, we are fully committed to leveraging private sector resources in a smart way. We are also convinced that including women in the financial system is interesting for the private sector. Women are known to be better savers and borrowers. Once they trust the provider, they also tend to be more loyal customers. So it is very much in the business interest of lenders to borrow money to women. This fund leverages funding from the private sector by working together with impact investors. And impact investors suggest fintechs for support to the fund, like Jessica has explained before. And at the same time, these investors invest around 3 times as much in fintechs as we as development actors through impact-linked finance. And my last point, the third point, refers exactly to this tool of impact-linked finance. Impact-linked finance links financial rewards to the achievements of positive social outcomes. Our agency pioneered impact-linked finance with the roots of impact in 2016. We started with the model of social impact incentives, the so-called SINC, in Latin America. And this model evolved into new practice of embedding rewards for impact into any kind of investment. Impact-linked finance was born. And today, many of our programs in Africa, in Asia, and Latin America use this tool and approach. We do believe that impact-linked finance has the potential to push the needle towards investment in sectors and countries that are particularly relevant for the achievement of the Sustainable Development Goals. And for a development actor, the fund is attractive as a majority of the funding comes from the private sector. We only pay for incentives. Our scarce aid money therefore reaches further. Another very strategic point of this whole initiative. So to sum it up, the fund uses impact-linked finance to incentivize fintechs to expand their products and services to vulnerable women where we do have the gap. And the financial rewards for fintechs are linked to positive gender equality outcomes. And so it at the same time contributes to the SDG 5, the gender equality goal, and the partnerships goal 17, where we have to work and should and really do work with the private sector. So this combination, which we see through that fund, is the very attractive thing about it. So I would like to close by saying that we do have a highly strategic, innovative approach here, and we hope that many others will join in the future. And in case my words were zero convincing to you, I'm happy that we now have another hour to answer questions and to deepen the discussion. So thank you very much for everyone who attends today.
Thank you so much, Christine. Fantastic to get your viewpoints, and especially being one of the pioneers of impact-linked finance and the social impact incentive with Roots of Impact. Really lovely to have your perspective on how far it has come to the point where we're launching this Gender Inclusive Fintech fund today. So thank you so much for joining us. I know that you have a very busy day today, and it was really lovely to have your perspectives in on this call. And now we'd like to hear from you as the audience. So we're going to bring up another poll. This one is particularly looking at how familiar are you with impact-linked finance? We've heard Jessica mention it. We've heard Christine talk about SDC's role in impact-linked finance. And of course, we're going to be talking about the impact-linked fund for Gender Inclusive Fintech. So we wanted to get a sense of how familiar you are with impact-linked finance. So you should see the poll pop up now, and feel free to give us an indication of whether you're doing it, whether you have extensive knowledge, a basic understanding, whether you've just heard of it, or whether you are here to learn, in which case you are in the right place. So we've got about 50% of the audience who has responded to the poll so far. The answers are coming in fast and furiously. So feel free to make your voice heard. There's nothing I love more than a little bit of data in the middle of a webinar. So please do feel free to get involved. All right, and I think that we can start sharing those results. Okay, we've got the majority, almost 50%, has a basic understanding of impact-linked finance. Some people doing it, yay, well done, that's awesome. Some with an extensive knowledge, some who've heard of it, and some here to learn. So that's great. We're all in a good place then. On that note, let us kick off the official launch of the Impact-Linked Fund for Gender Inclusive Fintech, or as we affectionately call it, the ILF for GIF. This fund has been brewing in our minds for years, and after many tweaks to make it just right, we are so thrilled to launch it today. So let's dive right in. When it comes to boosting financial inclusion for underserved women, fintechs are incredibly well placed. We know this. Their solutions often provide improved convenience, lower transaction fees, simpler loan application processes, and better security than traditional banking services, and are therefore better able to meet women's individual needs. The use of alternative credit data, for instance, is also better suited to evaluate credit worthiness of individuals without a traditional credit history, who are very often women. So time and time again, we've seen that fintech has been shown to offer solutions that have amazing potential to improve the welfare of women. And yet, the gender gap in fintech uptake remains significant. At almost 28%, this fintech gender gap is greater than the gaps for other financial and digital services, which shows us that access to devices and the internet is not responsible for the significant difference in fintech uptake between genders. So why is this gap so big? Well, one reason is that fintechs focus on serving early adopters, especially when starting out, to grow their user base as fast as possible, which makes sense. Because men are often perceived to be early adopters of tech, whether this is supported by data or not, many fintechs tailor their products or services and marketing specifically to men, or they take a gender-neutral approach to doing business, and in doing so unintentionally bias their products and services to men by not actively considering the needs and preferences of their female clients. And by the time these fintechs are operating at scale, they're caught in a self-reinforcing spiral of catering predominantly to male users. And so despite its promise, fintech is leaving female clients behind. This is unfortunately exacerbated when fintechs raise capital. So with investors nudging fintech to target the easiest to reach client segments, again, underserved female clients are getting left behind. Now, we know that women are commercially attractive. Sorry, Annika, if we could just go back one slide. We know that women are commercially attractive fintech customers in the long term. And as Christine said, for the same reasons that they are good banking clients in the long term. However, in the short term, they are often perceived to be associated with lower profit margins and slower growth. Scaling fintechs are often encouraged by their investors to focus on low-hanging fruit rather than to serve underserved markets, which are perceived to be harder to reach. So again, female clients are left behind. Now, this is especially clear when we look at which fintechs find it the easiest and the hardest to raise capital. Inclusive fintechs and female-founded fintechs have been found most likely to reach female end clients. And yet these two groups really struggle to raise the capital that they need to grow and scale their business. If we look at these graphs, inclusive fintechs made up only 1% of the total capital raised by fintechs in 2019. And female-founded fintechs made up just 1.3% of total VC raised in the same year. There's a clear mismatch between where capital is flowing if we want to prioritize the needs of underserved women. So how do we address this mismatch between capital and impact? We do so by tying finance directly to the impact created. And this is where impact-linked finance comes in. So impact-linked finance is all about unleashing the full potential of impact enterprises by providing better terms for better impact. The premise of this is simple. When enterprises create social value, for example, when a fintech focuses on improving the livelihoods of marginalized women as its clients, this impact is generally not compensated or rewarded in any way. There is thus no incentive for this fintech or any business to focus their business model on deepening impact. And this is especially true when they're trying to attract commercially focused investors who are looking for low-hanging fruit. Impact-linked finance corrects for this market failure, and we call it a market failure because that's what it is, by pricing and rewarding positive outcomes. So when a fintech focuses on improving the life of a female client, it's rewarded for this in the form of additional or saved revenue. And this additional or saved revenue also improves the commercial viability of the enterprise, attracting further investment that enables the business to grow and scale, which magnifies its impact even further. So the Impact-Linked Fund for Gender Inclusive Fintech, or as we affectionately call it, the ILF for GIF, provides impact-linked finance alongside technical assistance to fintechs to incentivize a stronger focus on gender transformative outcomes for financial inclusion. We're focusing on better outcomes for end clients by incentivizing well-positioned fintechs to create this impact. So how does it work? So fintechs, which you can see in the middle of your screen here, are directly rewarded with financial incentives for achieving gender transformative impact. These financial incentives improve their profitability, which in turn helps to attract additional investment. Now, these incentive payments that you see here can be made directly to the fintech, and we call this a social impact incentive or a SINC, and this is where we started with impact-linked finance, but they can also be embedded directly into the investment terms. And here we call this an impact-linked loan, an impact-linked revenue share agreement, or we've got a number of other impact-linked financial tools to make this possible, where we embed the terms directly into the investment terms. The Impact-Linked Fund for GIF works with renowned investment fund partners who are aligned in their impact goals. And at the bottom of the slide, you'll see our ecosystem enabler partners. We are very intentional about taking an ecosystem approach and supporting partners to build the ecosystem and pipelines of fintechs that will support gender inclusivity, particularly for marginalized women such as migrants. So what does this look like in practice? I want you to imagine a fintech who is ready to scale and who's looking for investment with strong financials, but who needs support in amplifying their focus on gender outcomes. Here, the ILF for GIF that provides targeted rewards that orient or reorient their products and services to focus on the needs of women. And with that impact-linked finance, we then see much higher additional impact in comparison to the baseline gender impact that would have happened otherwise. Now I want you to imagine a different type of fintech, one who is already serving marginalized women and doing it very well and having a very strong impact, but who is struggling to attract investors who are aligned with this mission. Here, the ILF for GIF provides financial incentives tied to the achievement of gender outcomes. And in doing so, it is improving the commercial viability and attracting investment. So if you look at this graph here of their total revenues over time, the financial incentives that come from the impact-linked finance push up the total revenues, which improves profitability and allows them to attract further investment. Of course, tying finance to impact requires that this impact is measured and managed very robustly. Each transaction that we do will benefit from a bespoke incentive structure that will be designed in partnership with the fintech to ensure that gender impact is reached across its full value chain. There are a few indicative measurements that we'll be using. First, livelihood improvements for end clients are really key to us. And these include increased income or cost savings, improved economic activity, and stronger financial literacy and health. Secondly, ILF focuses on better terms for better impact, which means that we want to incentivize the hardest to reach, most vulnerable women. And that's why we have a focus on migrants and services that are particular to them, like remittance services. And finally, we know that supporting gender equity at the ownership, board, and staff levels means improved focus on women as end clients, and so we'll be using this as a performance measurement as well. In terms of the fund fact sheet, we will be focusing on Sub-Saharan Africa, MENA, and Asia. We've secured anchor funding for the first close from SDC and ADA, who you're hearing from today, and are looking to finalize our second close in Q1 2023. Our investment sizes range between $500,000 to $5 million per transaction, with an associated financial incentive of $200,000 to $1 million per investment. But I should note that these transaction sizes are an average, and in practice, we expect to have some larger and some smaller transactions, and we want to provide the flexibility that allows us to have the deepest gender impact possible. Finally, the target enterprises that we'll be focusing on are those that are investment-ready, early to growth stage fintechs who meet at least one of the 2X criteria with additional impact potential and a corresponding growth plan. And as we mentioned, special focus will be given to fintechs with the ability to serve vulnerable women like migrants. The ILF for GIF is run by Roots of Impact and iGravity as facility managers. Roots of Impact started conducting ILF transactions in 2016, along with SDC, as Christine mentioned. In 2020, we joined forces with iGravity and partnered to form the Impact-Linked Finance Fund, which has different funding windows, and the ILF for GIF is one of these funding windows. Although ILF is innovative, it's not new. We've been implementing ILF transactions for several years, and we're seeing exponential growth in the demand for what is truly impact capital. At the end of this year, we'll have done almost 50 transactions and have a strong pipeline for 2023 and beyond. In the long term, the ILF for GIF aims to become a fully fledged blended finance fund, which incorporates a dedicated impact-linked finance tranche. The current setup, which partners with investment fund managers directly, means that we're already implementing the outcomes funding and the TA tranches that you can see at the lower half of this diagram. So all that's next is to attach an integrated fund to this design. And we envisage that this total fund size would be around $100 million US and would aim to launch in the next 3 to 4 years. If it sounds like this has synergies with the work that you're doing, please do get in touch with us. The ILF for GIF is designed to be inclusive and has lots of room for like-minded partners. You can reach out to us on our website or at ilfgif@rootsofimpact.org. We'd love to hear from you if this sounds like something that you're keen to be a part of. And I'm going to leave it at that and dive into some of the questions that have come through in the chat box. Thank you so much for sending through questions. Please feel free to continue to put them through in the Q&A box. The first question is, would you invest in funds who would look to invest in fintechs focused on gender outcomes? And I'm just trying to see who that's from. That's from Mega. Yes, so we are very much looking for, particularly looking for like-minded funds who are looking for fintechs focused on gender outcomes. As I mentioned, there's two ways of looking at the impact that the ILF for GIF can have, and the one is looking at fintechs who are ready to scale but could use help deepening their gender impact. The other one is fintechs who already have a strong gender impact, but who are looking to get an additional revenue stream to improve their investability. So absolutely, we're looking to invest in funds who are investing in fintechs focused on gender outcomes. And then another question, is ILF well suited to supporting enterprises that are at earlier stages of their life cycle? And that's from Arnu. Thanks so much for the question, Arnu. So ILF, the great thing about ILF is that it is not just one single instrument. We have a number of instruments within the ILF toolbox, as we call it. And so we've got instruments that are suited for different scenarios and particularly different life cycles of enterprises, depending where they are, so in their impact journey and in their business journey. So what we tend to do is we're able to look into this toolbox and see which tools are best suited for the stage that the enterprise is in. This fund is specifically looking at heading towards growth stage, but that's not to say that impact-linked finance as a whole doesn't have tools that would be relevant for this. So we're very lucky in that the impact-linked finance we can pull from the tool set across the life cycle of enterprises. And then a question from Sucharita, any countries in Asia that you are focusing on? So great question. We're not taking a country specific focus. We are intentionally aiming to keep the geographic regions relatively wide so that we can focus on what is going to be having the greatest impact and prioritize impact over geographies. So we are quite flexible in terms of where we see the biggest potential impact and aligning with fintechs who are mission aligned. And then another question, how do you determine what sort of incentives will be enough to move the needle on gender impact for a particular investee? Excellent question. That is the key question, is how much is enough? And to do this, we really work very closely with the fintech and the funder to understand the specific needs and requirements. We understand the context. We recognize that there is no one-size-fits-all solution that is going to work for everybody across all contexts. And so we start very much with the enterprise itself and design a structure that is bespoke, that will encourage the fintech that we're working with to go beyond what is comfortable for them, but so that it's not outside of their reach. So there's the short answer is there's no holy grail in terms of getting the exact right incentive that we can apply to all of them. And so the way that we approach this is by doing it on a case-by-case basis, very much hands-on, bespoke design. Question from Agnes, is the fund active? Yes, and Luana has just responded to this in the chat. It is active. We're working together with fund manager partners, and you'll hear from some of those in the chat. In the panel that's coming up shortly. And so we have kicked off, and we're very much looking forward to starting to do transactions. Question from Tali Goldman: do you have a minimum investment? I'm assuming, Tali, here that you're talking about the investment size of the fintech itself, or the size of the investment that's going into the fintech. We work along the lines of those guidelines that I had in the fact sheet of around $500,000 as a minimum. However, like I mentioned, it's a guideline rather than a hard and fast rule. What we're really aiming for is to look for alignment and impact. And we do have a little bit of flexibility to make sure that we're able to hit that, with some transactions being smaller and some transactions being larger. So you can have a look at that fact sheet on our website to get an idea of the ticket sizes, but we do have a little bit of flexibility there. Question from Charles: what are some concrete indicators to measure gender inclusion by the fintech company? Great question, Charles. So the one slide that I had with the sort of Venn diagram on it showed an indication of the type of metrics that we're going to be using. In practice, what will happen is that we will be designing these metrics thanks so much, Annika. We'll be designing these metrics in partnership with the fintechs themselves and making them bespoke to the individual context and needs of their clients. But this gives you an idea of the type of things that we'll be looking at. So for instance, income increase or cost savings as a result of fintech products or services, the proportion of women using financial services for economic activity, and improved financial literacy and stronger financial health of female clients are the types of things that we'll be looking at. What's very important for us is that we are looking at reaching the end clients. So you'll see on the slide we've got metrics at other levels as well, but we really do want to make sure that we're hearing from the end clients themselves, and that's quite important for us. And then a question from Jonathan: how do you measure impact and how is it verified? Will audits be conducted to verify the impact? If so, how often? Also, great question. So we what we find very key, of course, when we're tying finance to impact is that the measurement system that's in place is robust. And so a very integrated part of the ILF for GIF includes technical assistance that assists the fintechs in setting up a impact measurement and management system that allows them to not only measure the metrics, but also provides them with a good understanding of what their clients' needs are and how well they're measuring those. So we'll be walking through that process with them to ensure that their IMM system is robust. And then once this data is gathered, it will be verified by an independent verifier. So a verifier that is not tied to us, not tied to the fintech, but that can be completely independent. And we have that done by a third party on an annual basis to make sure that we're being transparent about that. And then a question from Manolo. Natasha, in your presentation, you showed being active LATAM, but in this fund not considered. Why? Good question, Manolo. So it's not to say that it will never be considered. We have done some impact-linked finance transactions in LATAM in the past, as we showed in the presentation. For this, we were specifically focusing on regions that aligned with where we could access fundraising, where we could see high potential for fintechs. We are open to expanding in the future, but we also wanted to balance the targeting with flexibility. So by all means, if you know of a really great partner who's keen to work in in LATAM for our second close. Let us know about it. Yeah. All right. Fantastic questions. Thank you. Thank you so much. I think we will hand over to the panel now. I know we've got a bunch more questions in the chat. We'll continue to respond to some of those in text, the ones that we didn't get a chance to respond to live. But for now, what we're going to do is hear a little bit more from the people who are making this happen themselves. And so I'm going to hand over to Sana from GenderSmart. Sana, over to you.
Thank you so much, Natasha and team, and great to be here. Just by way of context, my name is Sana Kapadia, and I'm the head of content at GenderSmart, which is a global field building initiative dedicated to unlocking gender smart capital at scale. I'm really excited to be here today to celebrate the launch of this incredible fund and initiative, and have a little bit of history attaching me to the project, because I used to work at Roots of Impact, where I learned about the immense potential of impact-linked finance, and was also part of the team that sort of led, in partnership with SDZ, a feasibility study that sort of laid the foundation in really answering the question of what was happening in the realm of financial inclusion, particularly for women, and the role that inclusive fintechs in particular could play. And as we've heard all throughout the discussion today, there is a very strong and pertinent role for fintechs across the spectrum, and particularly when it comes to focusing on women and vulnerable groups such as migrants. One of the things, or a few of the things I would say that were very clear from the feasibility study that we did was, as was described, is the funding gap faced by fintechs themselves, but also just the potential to better leverage finance in a way that could incentivize more transformative gender outcomes. And it's really great to see the little Venn diagram that was posted earlier in terms of really thinking about quality of access and quality of usage, not just increasing access in terms of numbers of clients being reached, because ultimately, if we are really looking to provide better terms for better impact, this focus on incentivizing more gender transformative outcomes are very essential. So fantastic to be here today, but I will actually bring in some of the incredible partners who are helping to bring this work to life, and will be very closely working together with the Roots of Impact and iGravity team. And we have Ali Burns, who's the CEO of Village Capital. We have Christina Jahaz, who is from Women's World Banking Asset Management on the fund side. We have Florian Kemmerich from Bamboo Capital, also one of the fund managers, and then Adia Shai from Women's World Banking Advisory. So we're gonna try and have as much of an interactive dialogue with everybody here today. I do have an initial question to prompt each of the speakers so that we can hear about how their particular organization will intersect with this broader ecosystem initiative. And then, as Natasha said, we'll try and bring in some of your questions as well. So maybe Ali, I'd love to start with you and just thinking about some of the seminal work that Village Capital has been doing in this field, and particularly around financial inclusion. Can you maybe share a little bit about some of the solutions that you're looking to incubate and accelerate, as well as what are some of the specific challenges that you see, particularly as it relates to women and migrants, when you're looking at the businesses that are coming out of the cohorts that you support?
Great. Well, firstly, I want to say a big congratulations to everyone involved in this initiative on this milestone and this important launch. Really exciting day, and I'm honored to be here. So I'm going to share a little bit of an introduction on Village Capital for those of you who don't know us, but I'll keep it brief and some context on how we came to this work. I only have 2 minutes, so I'm going to go as quickly as I can. At Village Capital, we are dedicated to unlocking capital, whether that be financial capital, social, or otherwise, for early stage impact-driven entrepreneurs. And over the past 13 years, we've directly supported more than 1,500 startups around the world who are building innovations that address issues of economic mobility and the sustainability of people on the planet. Those startups have actually gone on to raise more than $4.5 billion in investment capital, an amount we're very proud of. But one of our consistent themes globally over the past 13 years has been fintech, with an emphasis on financial inclusion and financial health. Through that work, we've supported a number of startups who are building solutions specifically focused on migrant populations. We've also run a dedicated accelerator supporting fintechs building solutions for migrants. So a few examples of the types of companies we've supported include Leaf Global Fintech, which began as a response to the global displacement crisis and the problem of millions of people having to carry cash across borders each year. Leaf Global Fintech offers a digital wallet that can be used by the unbanked and in different currencies. Also a company called Siwa that's based in Morocco, which is a digital platform for securing and managing tontines or savings circles without a bank account. They provide credit scoring, which helps to pre-qualify users for financial products and help them get connected to formal financial services, certainly services that migrant populations are in need of. But as was very clearly outlined from some of the previous speakers, if these solutions aren't specifically thinking about gender inclusion, they're going to be missing a huge opportunity to solve the problem. We know that women face unique challenges in their migration journey that puts them at a disproportionate disadvantage when it comes to their financial health. So last thing I'll respond to is the challenges of working with these specific companies, working with enterprises that are supporting gender inclusive solutions in fintech. To add to some of the things that Natasha shared very clearly around the challenges of attracting investment capital, et cetera. One of the things that we're seeing is sociocultural factors that affect financial services access for women more broadly, which was also, I think, kind of starting to get discussed in the chat, is exacerbated in the refugee and migrant space, creating additional layers of marginalization within a community that's already very vulnerable. So entrepreneurs are often unable to reach women who are meant to be the direct beneficiaries of the solution, resulting in a slower pace of adoption, sometimes an inaccurate or incomplete understanding of the adaptability or applicability of the solution, which in turn has a negative impact on the ability of the entrepreneur to really plan and achieve their success milestones. Correspondingly, as outlined in the data that Natasha shared, is in fact affecting investor visibility and their confidence in the company as well. So these are definitely the things that we're seeking to address in the work that we're doing through this program and work we've done historically as well.
Fantastic, Ali. Thank you so much for getting us going. And we'll come back to some of the points you mentioned, but keeping up with the thread of what we're seeing at a wider ecosystem level, maybe Adi, I'd like to come to you next. And in your role at Women's World Banking Advisory, where part of your work will be around sort of conducting baseline research and also understanding what particular solutions work for migrants, which specific remittance products and solutions can then be tested by traditional financial institutions. Can you maybe share a little bit of what you've learned as to why a gender lens is critical and how to be incorporating that across the sort of full life cycle from product design to marketing, and again, also specifically for vulnerable groups such as migrants?
Yes, thank you very much. And also, again, I'd like to echo Ali's words. Congratulations and thank you for involving me in this conversation. You talked about the research that we do, and it's part of a process that we go through with all of our financial institution partners. I head the advisory work in Africa, so we provide a sort of technical assistance that was talked about a little bit earlier to the financial service providers. So we start our work with these institutional diagnostics. You've really got to understand the institution as well. You've really got to understand, elements that can help us improve or make better or solve the problem. So you're looking at their processes, their structure, their use cases, their marketing. You've really got to have a view that unless you have the ability to create a commercially viable solution, it's not sustainable. So understanding the institution at the front end, I think, is a key part. That customer research that you talked about, that for me, that's the secret sauce. That the better you can understand the end customer, the women we're trying to help, the better you can come up with a solution that will work. So both sort of quantitative research and qualitative research, understanding their context, understanding their financial behavior, their pain points especially, understanding all of those things before you go into developing the solutions, and a really collaborative, women-centered design approach to developing solutions, and then going into the sort of the user testing. And there you're looking at things like the key messages that would resonate, understanding the willingness to participate, all those sorts of things. So that's kind of a standard process that we walk through. So if I were to look at an example, my colleagues in Indonesia helped Dana, a fintech Dana, create a migrant remittance solution last year. And I think one of the pieces for me that was most interesting, one of the learnings, perhaps a little bit of a surprise, Dana as their customer base really focused on sort of middle and upper income consumers. That's their customer base, but they had a real intention to affect the lower income customer base. The way they found at doing it, the research that they undertook, they found that in order to attract, in order to reach these customers, it was not so much a case of talking to the families of the recipients, or talking to the recipients who have a lot of influence on how money is sent. It's not necessarily going to the shops or the agents or the social environments that the women they're trying to impact actually frequent. But they actually found that working through their employees, many of these women were domestic workers, actually working through their employees was the most effective way of both reaching these customers, but also importantly, helping them overcome some of the challenges that these women had that were specific to them. Things like their access to technology, the ability to, and the comfort to learn how to use the technology, doing this, accessing them through their employees in their homes, having the time to be able to reach these women and really take them through the process to actually help them understand how to use the system. That was all based in understanding the research and understanding the women that they're trying to help. So I think that was a great example of how, if you really do your research properly, you can understand how to not only develop these solutions, but make sure they're effective for the consumers you're trying to help.
Fantastic, Adi. Thank you so much for those examples, and would definitely want to come back on a few. And I appreciate also how you mentioned from a research and analysis perspective, that importance of intersectionality, the various realms of being care workers, domestic workers, like just how it all sort of intersects and why a very deep gender lens is important here. So maybe now we'll move to the investment side of the spectrum, and we'll hear first from Christina of Women's World Banking Asset Management, where you are the Chief Investment Officer and have been at the forefront of some of the gender smart structures for financial inclusion. So Christina, I'd love to hear, as a fund manager that's really trying to sort of move the needle in terms of getting more money in the hands of gender inclusive financial inclusion businesses, and in particular fintechs. How is this working in practice, and how is it fitting into your broader investment thesis? Can you maybe share a bit more color there to start with?
Sure. Thank you, Sana, and congrats from me for ILF. At Women's World Banking Asset Management, what we do is we take direct investing stakes in financial inclusion companies. We've invested in 19 to date across 2 funds and across the world. And those include fintechs. We're working with those investments to ensure that their solutions reach women in particular. And our investment thesis is that innovative financial inclusion and fintech companies that approach gender parity in their customer bases and workforces will outperform, on the basis that they're sourcing both customers and talent from the largest possible pool. So this is a strategy that maximizes customer acquisition and talent acquisition by being fully inclusive of women. We've seen plenty of research. We also see the results in our own portfolio, which back up the theory that gender diversity is going to correlate with higher growth and higher return on equity. But one of the challenges we face when we are pursuing this strategy is that although this understanding of the business value of gender parity and gender diversity is growing, it doesn't always generate into business urgency or translate readily into visible quarterly results that drive business priorities. So one of the ways that impact-linked finance can address this prioritization problem is by offering an immediate financial reward for achieving gender diversity improvements. And that provides this critical translation and can be a very sharp tool for driving the change that we're seeking.
Thank you for getting us kicked off there, Christina, and we'll come back in a moment. But for now, maybe I'll come to you, Florian, to just build off that and what you are seeing in the world of Bamboo Capital, and really that role that ILF can play in better supporting gender inclusive fintechs more broadly, and some of the barriers and challenges with regards to fundraising that have already been mentioned.
Absolutely, congratulations, and we're really excited about ILF. And of course, some of its partners who we also work with and are big fans of. And what I particularly like here is about the discussion that you're looking at a similar problem, but from different angles. For-profit solutions, non-for-profit solutions, whether it's focused specifically on gender itself or the outcome or the climate-related issues. So at Bamboo, of course, what we do mostly here is we provide equity and debt to MSMEs in emerging markets. We like to go rural. And so it's essential services, access to money, access to energy, access to healthcare, access to education. And then a lot of also is smallholder farming, which relates in these areas very much to the productivity of the local population. And the key center is livelihood of households. And at the center stands a woman. And not only from a microfinance point of view, where it's well known, it works very well, that it's much more effective lending to women than to men on microfinance. But right now, over the years now, we have actually looked at the missing middle finance. So it's beyond microfinance, but below where the local banks would lend. And this is a big problem actually, specifically for women. And specifically if you now look at the recent trends of increased energy, of increased inflation, of actually the income of low income population income is decreasing now, because it wasn't the 15 years past. Whatever happened on the stock exchange would not affect, but here it does. It's a looming food security crisis. I mean, you have so many factors going into where it's very difficult actually to see how things evolve, and it makes it tougher. Increasing interests, equity is. People are shying away because you cannot project how the world will look like in 5 or 10 years. So that makes it actually even tougher, specifically for women in these geographies. And that's where the use of proceeds, as Christina was, for example, CJ was mentioning before, specifically that, the use of proceeds is the angle. It's not just to provide capital, but to go into the missing middle, to de-risk it. And this is where we have pivoted into partnerships over there. We started fully private, not with DFIs, and we've pivoted into a model where we try to adjust the risk reward return by public-private partnerships in an alignment, where aid is not just aid money, but aid is either used for technical assistance to de-risk our investments into company, or catalytic capital is used to reduce the risk reward return for private investors, and in the same sense. And then specifically now looking at the gender angle, and gender not because of microfinance, but it goes all through of our impact reports. And we recently also have worked on a partnership with a big NGO, Care International, Care USA specifically, and the International Trade Center, which has a platform called She Trades with 40,000 women-led organizations, and just also launched a fund into that space on financing, where we really look at women-led, women-employed, and women-benefiting companies. But again, it is not easy under the given circumstances actually to attract private investors. As Christina was saying from SDC, for example, to attract private investors on a more concessional base, because it has to be concessional to really tap into small tickets. So we're doing big efforts here, trying to how to crack the nut, go into mainstream financial markets. Not the concessionary pockets, not the foundations, not the DFIs with a specific development mandate, but really trying to involve all sorts of players in different waterfall and layout. And we've been doing this with IFAD, we do this but also with UNCDF on the ground, but very particularly also with ITC and CARE. So in the same sense, what you're doing here is extremely relevant. And the problem is really the spread of risk, reward, return, of the perceived risk of emerging markets, specific sectors like agri, for example, in last mile, where right now it's very, we cannot sing, it's very easy. Of course, this technology provides two pieces, and that's why we have been doing much more tech for impact, specifically, either tech-enabled or tech companies, where technology resolves access and the affordability of goods and services for the population, which is great. However, now we also see the readjustment of technology companies in the market, because there was a hype during COVID, also in emerging markets, and that is being adjusted, which makes it again more challenging. So I just wanted to state that not all,
absolutely
sunny what shines there, but the need and the focus and the alignment of different parts of capital to solve that problem and to kick off these companies to help them scale is what we're focused on here.
Fantastic, Lauren. Thank you so much. And I think it also echoes the sort of wider theme here of leaving no one behind and making sure that as we build back better, we're doing it in a resilient way that makes sure we're all carried forward equitably. So thank you for that. Natasha, maybe a heads up for you. I'd love to bring you into the dialogue in a moment, thinking about this, the different types of capital. But before I do that, I see a question in the chat window that I think could be interesting to bring in Adi and CJ on, with regards to the way that we can be thinking about getting the more traditional banking sector and thinking about the financial institutions that you both work with from an advisory but also investment capacity. How can we be getting those more traditional institutions also more gender aware and ultimately more gender transformative, potentially leveraging impact-linked finance in that case too? Either of you, feel free to jump in.
I mean, I can mention from an advisory perspective, what we're experiencing in Nigeria, where a lot of our focus has been over the last couple of years. It really has been this story of, if we want to achieve an impact at scale, we have to bring these traditional institutions in, particularly with sort of mobile technology and the reach that that's able to bring through. It's no longer really viable to focus on the institutions that have historically proven that they care. What we need to do is prove to the institutions that haven't proven that they care that this is a viable market segment to be working with, and that's our focus in Nigeria. I think one of the challenges that we've found is, and I think Florian kind of touched on it. Historically, this is a CSR play, off the side of somebody's desk. That's not going to work if you want to achieve an impact at scale. So the ability to ensure that you're helping these institutions both develop commercially viable solutions, but also what we've learned recently, these kind of incentives that are in play, helping them put behind their work the sort of gumph, effort, energy that they are against all of their other products and solutions, because everybody has choices to make. Every institution have choices to make, and they have to report back to their shareholders. So we've been in situations where there've been some fantastic solutions that have been developed, but the return on those solutions compared to alternatives have meant that we haven't been able to roll them forward. And I think the model here, where you're able to put incentives into the picture, really just starts to help to push that balance a little bit, because it has to be commercially viable to work for these institutions that we have to work with.
Absolutely, and that sort of bridge between the business and the impact case. And CJ, maybe I'll ask you to tailor your response with another question that was in the chat window around how ILF can then be helpful to support more female-owned led businesses. So thinking about a gender lens, not only from the perspective of the end user, but also within teams and organizations themselves.
So I'll start by addressing, and Ade mentioned this, and the question of how do we get the bigger banks focused on also gender diversity, outreach to gender. I mean, one of the driving reasons that Women's World Banking even got into the asset management business is because we've recognized the important influence of shareholders. And 10 years ago, 15 years ago, when a lot of institutions that were dedicated to microfinance began to transform into for-profit, into shareholder-based institutions, that's when we identified actually a negative impact on women. And so there is definitely a link between the shareholder focus and what is happening, what is driving the business priorities of institutions. So we need shareholders around the table that are believers. And that brings the point of ILF, and the point I made early was bringing up earlier, and several of the panelists have brought up, if we don't see the translation in it to immediate quarterly results, which often shareholders are looking for. We know that there's a long-term outperformance play, but we don't see the immediate impact on the bottom line. We lose the focus of investors. And also investors, as they pursue growth and accretion of value, are sometimes, often the strategies that they pursue are not fully pricing in the externalities of harm they're doing. Whereas, the opportunity to do no harm and be inclusive is something we still have to quantify. And I think ILF is a great way to quantify that impact on the bottom line. To the second question, and perhaps perhaps Roots of Impact can jump in as well, but the focus that ILF is looking for of outreach to women-owned entrepreneurs and women-owned enterprises is, I think, the first step in making it work for women, and their focus on counting women-owned enterprises in the institutions that they are providing impact-linked finance for is definitely the first step for making it work for the entrepreneurs.
Absolutely. All right, thank you. I know that we'll probably run out of time any moment now. So if anybody does have any questions, please do put them in the chat window. And maybe Ali, just coming to you for 60 seconds, like why do you think this ecosystem approach, is what is needed in this moment? And Florian, any parting takeaways from yourself as well before I hand back to Natasha? Ali, over to you. A quick.
I'll briefly touch on not really answering the question on ILF, because I think that's for Natasha to answer, but on the question of equity. So one, ecosystem building is at the heart of everything that we do. If we're not activating all of the key players in the system, we're not going to create transformative change. So I think the way this initiative is coming together with key players, understanding different levers we can pull is really important. On the question of helping women entrepreneurs raise equity, I'll just give a brief plug for a toolkit that we're going to be releasing very soon, 2 years of research that we've done on reducing bias in the investment decision-making process for women who are raising equity. So more to come on that, and excited to apply it to the work that we're doing in this space as well.
Fantastic. And yeah, Village Capital is definitely a leader in very innovative approaches. So thank you for that. Florian, any final remarks for you before we wrap up the panel?
Yes, I think for my side, my learning is that the old times of the me, myself, and I, we're all specialists in a specific piece and do our own thing, no longer work. Technology is inclusive. The need on the ground is inclusive. The type of participants on triggering that change is inclusive. So it's only when we all get together, we can really have a systemic and global change, rather than in the old way where we had silos and specialists doing their own thing.
Thank you so much. And thank you to each of you. I know that was a bit of a whirlwind, but if you do have any other questions, please let us know, and I'm sure we'll get them answered. And back to you, Natasha, to take us to the next part of the program.
Thank you so much, Sana, and so special to have Sana be moderating our panel, because Sana was one of the original masterminds behind the ILF for GIF. So a huge thank you to Sana and to our panelists. It really has been a whirlwind of a session, and a big thanks to everybody for the questions that came through. There is one question that came through that I want to quickly jump into before we hand over to our final speaker of the day, and that was a question from Mateo, asking around how we make sure that the impact lasts beyond just the impact-linked finance. And I think this is a really key question when it comes to impact-linked finance, is how do we ensure that once we step away with impact-linked finance, that the impact that we've created continues to persist sustainably. And so the way that we view this when it comes to impact-linked finance is that it's all about getting the intervention at the right point. So if we look at where the businesses are, when they're poised to scale and they're defining their business strategies, ready to scale, if we can adjust the business model at this point in a way that will continue beyond just the period of the impact-linked finance, that this is crucial. Now, when it comes to impact that we're trying to have on when it comes to gender impact, we've heard from a number of different people today that the business case for women is strong. There is women are a profitable customer segment. So really all this is about providing the right nudges and incentives at the right times to ensure that fintechs are tailoring their business models in a way that they reach female clients. This will set them up particularly well for the long term, because we know that the business case for banking on women is there. And so it's all about the timing and getting it right. And so that's one of the reasons we're very excited about this fund, is that it helps make the changes at the right time so that the impact lasts in perpetuity. And now, as we wrap up this whirlwind session, a huge thanks to everyone who has spoken so far. But before we close out, we have a few words from Susanna Thier-Lefonet, whose surname I am not doing justice to because I do not have the beautiful French accent. But Susanna is one of our supporters from the Austrian Development Agency, and we're thrilled to have you here. So Susanna, over to you. Susanna, you're on mute.
Now,
there we go.
Thank you, Natasha. I was about to say you're doing well with my last name, and you're not the only one struggling with it, so no worries. It's Thier-Lefonet, French name. Well, what can I say? I mean, we've heard so much about the ILF for GIF now, how it works, where the challenges are, or at least the expected challenges. I think there will be surprising ones too, and then also what it makes unique for us as a donor. This program is so special because it offers the opportunity to learn and to develop ourselves as well. With this program, we're broadening our gender strategy. We have it now as a cross-cutting theme, of course, but we try to be innovative with this, with the help of this program in that respect. And at the same time, it will help us to modernize our private sector development strategy. You heard at the beginning that I'm the private sector development advisor of the Austrian Development Agency, and as such, I have the focus on, I put the focus on systemic and inclusive development. And in that sense, this program will also help me to achieve my goals in that respect. So what is so great about it is this combination of enabling local economic development with significantly increasing the agency of women, which is so important for us. And the program will also help us to understand better what the markets really need. And these are the main reasons why we decided to support this fund. Let me add another one. It's this mobilizing of private sector money. I think it's been mentioned before, but that is also very important for us to multiply the effects we are working for, and that is this better impact for vulnerable women. And the other aspects that I like so much are about the incentives that we're looking for fintechs, and to really broaden the program as much as possible also into the it's been mentioned in the panel now, away from those specialized on CSR-like approaches. So Let me finish by saying that we're really grateful for having this opportunity. We're also grateful for being able to closely cooperate with SDC, with the ILF, with Roots of Impact, with iGravity, and all the other partners that are about to join or already joined. Maybe the last sentence, if anybody in the audience feels this could be something for her or him too, just let us know. I think I can speak for the whole team when I say that we're very open for further partners and further supporters to the fund, and also maybe even more important to the idea behind it. Thank you.
Thank you so much, Susanna. And then a final word from Sana around private and public sector capital. Sana, over to you.
Oh, actually, Tash, I was going to say it would be great if you can round us off.
Oh, sorry.
Too. Yeah, I mean, maybe just a parting. Thank you, everyone, for joining. And I think what really excites me about this launch here today is, first of all, seeing the excellent questions and people wanting to really sort of push the boundaries on gender impact and outcomes, and the role that providing more incentivized capital and better incentive structures can play, and just the role of both public sector and private sector capital. So congratulations to all, and thank you for a great session.
Thank you so much, Sana. And with that, that brings us to the end of our launch for the ILF for GIF. A huge thank you to our wonderful speakers for sharing their insights today. And thank you to you too for joining us and for adding to the discussion. Please do feel free to reach out to us if your work is aligned to this. I do hope that today is just the beginning of this discussion. Thank you so much, and goodbye.